Investment Proposal. GRC Service Company. Prepared for Ms. Hazel S. Espejo. Prepared by Completado Jimena D. Iscano Crystalline Jane J. Labhanan Rica P. GRC Company is founded by Ms. Jimena D. Completado, Ms. Rica P. Labhanan, and Ms. Crystalline Jane G. Iscano. GRC is a service company where we provide services to our customers, not a product. By providing services, this company generates money. JRC is a firm that provides professional and trustworthy financial analysts that helps our client in making investment decisions.
Good day, I am Rica P. Labhanan and I am here to discuss the stock and bond. So stock. A stock is a security that represents a fractional ownership in a company. When you buy a company stock, you're purchasing a small piece of that company called a share. Plain and simple, stock is a share in the ownership of a company, and stock represent a claim on the company's assets and earnings. As you require more stock, your ownership stake in the company becomes greater. Whether you say shares, equity, or stock, it all means the same thing. So I have here an example of company where you can invest a stock. For example, you can invest in Ayala Corporation, the publicly listed holding company for the diversified interests of the Ayala Group. Ayala Corporation is founded in the Philippines by Domingo Rojas and Antonio de Ayala during the Spanish colonial rule. It is the country's oldest and largest conglomerate. Ayala has subsidiaries, the Ayala Land, Bank of the Philippine Islands, ACEN, Manila Water, Ayala Healthcare Holdings Incorporation, and AC Industrials, Airstreet, Ayala Logistics Holdings Corp., Isuzu Automotive, and Dealership Incorporation, and more. Next is bond. Bond are investment securities where an investor lends money to a company or a government for a set period of time in exchange for regular interest payments. Once bond reaches maturity, the bond issuer returns the investor's money. On the other hand, bonds are issued by governments and corporations when they want to raise money. By buying a bond, you're giving the issuer a loan and they agree to pay you back and face value of the loan on a specific date, and to pay your periodic interest payments along the way, usually twice a year. And I have here an example also of company where you can invest a bond. For example, you can invest in BPI MS Insurance because it's raising the standard of consumer-driven insurance services in the country. BPI or MS provides insurance protection with unprecedented strength and stability through the joint venture of the Bank of the Philippine Islands or BPI and Mitsui Sumitomo Insurance Company, one of the largest non-life insurance companies in Japan.
Good day everyone, I am Kristen Jane Hapalescano, your presenter for today. And now we're going to tackle about mutual funds. A mutual fund is a company that pulls money from many investors and invests the money in securities such as stocks, bonds, and short-term debt. The combined holdings of the mutual fund are known as its portfolio. Investors buy shares in mutual funds. Each share represents an investor's part ownership in the funds and the income it generates. For example, you can invest in Sun Life Finance Incorporation. It's a publicly traded company domiciled in Canada and is the holding company of Sun Life Assurance Company of Canada. The company manages its operations through 5 business segments, namely Sun Life Finance Canada, Sun Life Finance US, Sun Life Finance Asset Management, Sun Life Finance Asia, and Corporate. Along with its subsidiaries, Sun Life Finance provides savings, retirement and pensions products, and life and health insurance to individuals and groups through its operations in Canada, the USA, the United Kingdom, and Asia. The Sun Life Finance Group also operates mutual fund and investment management businesses primarily in Canada, the US, and Asia. Sun Life Finance operation in the Philippines established in 1895 distribute a range of protection and savings products largely through career agency sales force and bancassurance channel. Sun Life Finance offers individual and group life and health insurance products to individuals and businesses through a wholly owned subsidiary, Sun Life of Canada or Philippines Incorporation, and through a joint venture with the Yuanqing Co Group, Sun Life Gripa Financial Incorporation, in which the company has a 49% ownership stake. The company also offers mutual funds through another wholly owned subsidiary, Sun Life Assets Management Company.
This is Jimena Completado, and let's talk about why diversify a portfolio. Diversification of portfolio matters. Diversification is the practice of spreading your investments around so that your exposure to any one type of asset is limited. This practice is designed to help reduce the volatility of your portfolio over time. Of course, one of the keys to successful investing is learning how to balance your comfort level with risk against your time horizon. One way to balance risk and reward in your investment portfolio is to diversify your assets. This strategy has many different ways of combining assets, but at its root is the simple idea of spreading your portfolio across several asset classes. Diversification can help mitigate the risk and volatility in your portfolio, potentially reducing the number and severity of stomach-churning ups and downs. Remember, diversification does not ensure a profit or guarantee against loss. For the next 5 years, the projected outcome from this investment is the high possibility of generating a higher return. We cannot deny the fact that the stock prices is constantly changing. Sometimes it will go up or down due to the law of supply and demand. However, chances of getting a higher expected return is at its point. Investing in stocks, bonds, and mutual funds is a great diversification of portfolio. Stock investing is quite a risky decision. However, the bigger the risk, the higher the return. In bond investing, for instance, when you buy a corporate bond, you do not own equity in the company. You will receive only the interest and principal on the bond, no matter how profitable the company becomes or how high its stock price climbs. But if the company runs into financial difficulties, it still has a legal obligation to make timely payments of interest and principal. The company has no similar obligation to pay dividends to shareholders. So, in a bankruptcy, bond investors have priority over shareholders in claims on the company assets. On the other hand, mutual funds also give you an efficient way to diversify your portfolio without having to select individual stocks or bonds. Fund managers do the research for you. They research and select securities and monitor the fund's performance. Other companies allow you to invest for as low as 1,000 pesos. So, if you are a new investor, investing in mutual funds is best for you.